August 26, 2023, and this is a weekly market overview. So let's take a look at Spider. This is what it looks like. This bar is very, very interesting. Friday. So we have a nice 2 weeks and a half, 3 weeks drop after a very long run. It went through our 50 days moving average, the blue line. The last time it was under the blue line, this blue 50 days moving average. That was all the way back in March, mid-March. A whole quarter back, and the market was ramping up, staying above, and then finally it's a retracement. So what we have, let's switch this back. Let's switch back to dark mode first. Okay, so you can see all the lines. Yeah, that's better. So what we had is a nice run for the quarter, all the way up until July, pretty much end of July, and then last month was just a correction, retracement of that quarterly run. And I would say this is only like a 20% retracement of the whole run, and then the counter retracement come back again, bounced. And Friday was the Jackson Hole, the Federal Reserve speech at Jackson Hole, and the day before with a big down bar. And it seems like they tried to push it down, and then at the end they brought it back. So if we go to the 5 minutes chart, that's the problem with the 5 minutes. I have to drag out the scale again. We can see pretty much yesterday what it did. Let's see here, and it's pretty much a nice. Let's switch to 15 minutes. 15 minutes probably a better picture. There we go. Yeah. So each bar right here is 15 minutes. On the 15 minutes charts, it actually came back above the 200 days moving average of the 15 minutes charts. Interesting. Very interesting, because clearly on the 15 minutes they've been pushing it down, and finally the buyers comes in and decide to buy it back up on the border market. So it was temporarily oversold, and you're very clear levels of where they're fighting a 15 minutes 200 days moving average. For a while the whole retracement was fighting below, and then finally the counter retracement came back up with, they try to push it back down again, and now the market actually end up above the 200 moving average and above the 50-day, the blue line. I'm sorry, this is 15 minutes. Right? So the 200 bars moving average and the 50 bars moving average on the 15-minute charts is fighting above. So this becomes meaningful now, because if we make another move, this is where is the 15 minutes. This is where is next target. If we can break through this, then we have a recovery. It doesn't, it will bounce off, and then it will test again the 200 days. So you have two basic scenarios here, right here. One is it's going to go for this. It's going to test the previous peak and see if it go above it on the 15-minute chart. The next, and if it tests it, it could fail and then come back, and then it will test the 200 days, the 50 and the 200 day. I'm sorry, again, 200 bars on the 15 minutes, also 50 bars on the 15 minutes chart. Right, this is a 15 minutes chart, so this bar is 15 minutes. This red line represents a 200 bars moving average. The blue line is a 50 bars moving average. this is significant, and this is significant here. So you have two areas where they need to test. If we go through, then there's a breakout trade. If we go through and retrace and bounce off this, that might give us a false hammer. But if we go back to the daily, this is really clear that, hey, this is previous bottom, and this is the buyer decided to come back. So Monday will be very significant. Monday was very significant that the question is, do you go long? Do I go long? The problem is on the daily, the blue line is, and that's where the peak. This is blue line. This is daily now, so we have the 50 days moving average, and that is where they need to fight. Matter of fact, we'll have this. This is the 7 day. The thin yellow line is the 7 days moving average. It's close above it, so it's gunning for the next line right here, 50 days and 21 days, where they compress right here. So this is the fighting level. This is the level they need to break. This actually, this is a trade right here. This, I would say this is a 65% chance to 75% chance of selling a low delta put somewhere around here. You want to sell a put somewhere around here, and there's a bull trade and you're selling a put against that. That does not warrant just buying the instrument itself yet, but that does open the room, open the setup for trade, because this is kind of a false hammer. It is, except that is the body is in the middle instead of top, so that gives you a little lower percentage. But clearly, the market is a short-term oversold, and they're buying it back at that point. Of course, these are all fundamental driven. Technicals only reflect what's going on in fundamentals, but right here, yeah, that's a trade, and it depends again also on overnight and the weekend news. But if everything stays the same, that's a trade right here. That's a trade right here. And Monday, there's plenty of time to digest material and then see to open a trade selling a put, a low delta put, 20 delta and below put on the spider. So now that I talked about the border market, let's also look at the QQQs. Similar, very similar. But you have a lot of, it's heavy. So this, you want to sell it below here, and if it break below, that means the trade, the move fell. Right? If everything goes well, then we'll gun for the next level, which is over here. So that's the trade right here. This is a trade. And Monday, almost Monday. Yeah. Okay, the Dow Jones a little bit weaker. It doesn't have much recovery. So that's fine. Yeah, this is the Doji star. Right, we're fighting at 200-day. The red line, as I say, 200-day moving average is very significant. You're fighting here. This is very good. Yeah, this is in the. So all these guys, what I call a mini Thor hammer, kind of like. It's not full false hammer, but there's buyers coming in. So that's that. Let's go down the list. Yeah, these guys are kind of like all over the place. Let's take a look now. There's nothing to do. Especially country garden blew up. The Chinese economy is going to be, it seems like it's in bad shape right now. So yeah, Let's look at the SAMIs. Yeah, Apples. They broke the trend. This uptrend is over. Basically, did the reversal. The question is it going to try bounce back again? That's the big question right now. And so this is how I would draw a resistance line. Let me show you guys. This is the initial right here. Okay. I connect the recent peak, these three, right? After the drop, you see this is the gap, this is the big drop. Right? This is the actual real move. Right? That was actually a divergence trade on the MACD. So this is how I draw this line. This is the resistance line. You need to break through this line area for it to, and then the next level is here, and then the next level is here. So it's heavy on the top, basically. This is heavy on the top. Right? But if the market uphold and things are turning around, going back, it might gun for these level again. But it is a little top heavy. So yeah, after this reversal of the long trend, it might, who knows? But right now, there's a good chance, good trade, selling a put, a low delta put on the border market. The Amazon, yeah, they all accepted these tail now, so it's gonna be interesting. Things gonna likely pick up again. Last week of August, so everybody is on super lazy mode. Wow, look at IBM. 1, 2, it's gonna gun for this peak now. This is where the resistance is gonna gun here. So let's draw that. Let's put the resistance line in. Let's fix this to be here. Yeah, around this area. This is where the resistance is gonna gun for. If the market starts rallying, this is the first guy that's going to go for a breakthrough. This is the first guy going to try for that. So that's a breakout candidate. That's a breakout candidate right here. Okay. Yeah. So overall, the bull market is displaying some potential rally, but we'll have to see. That is a trade. That's a trade right there on the bottom market. And I say it's a 65% win rate at this point. Could be better, could be worse, but right now, 65 to 75% win rate. Okay, well, NIO, that's the one. It goes back about, it's fighting at that level, and then now it's above. So we'll see. Just needed to make an up move. Lee is a good hand. The trade is still holding well, so that's fine. NIO was the weak one, but still holding up, so that's fine. That trade beginning of the month. The Chinese market, the Chinese economy is really hurting. That's why I bought the whole thing really down. Otherwise, should not. Typically, it doesn't keep going for every level. But it's still okay. That's the nature of the trade. You just don't know. Sometimes it will come back, and you gotta stick with the plan and play it out. Let it play out. Wait for the market to come in your way, in your direction. Yeah. Okay, so that's about it. I mean, it's gonna be a light week. Maybe trade here, and it depends on the overnight and the Monday. How's the market? If it gaps down, it comes with some bad fundamental news, then this trade should not take this trade. But if everything uphold, yeah, that's a trade right here. Right, so some put it 4 to 6 week out, 20 and below delta probably, and it depends also on the premium level. If the premium is justified, right? Premium, the REX stay a little bit above, so you might have some not too bad premium, but again, it depends. If the premium justify that, say, this is a, say you can find 1 to 5, 1 to 4 and below, that's great. Yeah, 1 to 3 is excellent, but that's more difficult. So the risk-free roll ratio 1 to 4, 1 to 5, yeah, that will justify it. Otherwise, why not? Okay, that's it for the weekend overview. I mean, I take a quick browse on the news, and there's nothing much really. So, yeah. Yep. Okay, so that's it for the week, and then we'll see how the market opens on Monday and see what developed over the weekend. Thanks for watching, and talk to everybody next time.